Welcome to the latest episode of our Sound of Finance podcast. My name is Kurt Welpas, and I'm a senior manager at zeb.consulting. I'm joined today by Erwin Majchenic, a partner at zeb, who's leading our strategic IT consulting, and Nikola Ilicic, a senior manager at zeb, responsible for our payment consulting business. Erwin and Nikola co-lead our international payments practice, and today we'll be discussing the state of the market and future trends in European payments. Welcome, Erwin. Welcome, Nikola. Thanks for taking the time to sit down with me today.
Thank you, Kertu. Happy to be here.
Yeah, very happy to be here, Kertu.
So our topic for today surrounds the payments industry in Europe. For those listeners who are not familiar, what do you mean by payments?
Well, payment can be understood in a quite wide way as we're talking about financial services. This is a process, and banks always deal with money, of course. However, if we talk about payment specifically, we consider payment as a transfer of funds between two parties, either the payee from the payee side and the payer side. And for the sake of our project work, we consider mostly retail payments, means that either on the one or the other side, at least one is a consumer. So within that, we not only have the transfer of funds, but also for the sake of definition, to define the means of a payment, which we call payment instrument. And this can, of course, be simply a cash payment where you hand over cash or something. And this is more and more the case, electronic transfer, still checks are around, or, of course, debit or credit cards.
Customers typically don't think about payments when they pay at a grocery store by card or by phone. Erwin, would you be able to elaborate on this a bit more to give us a renewed focus?
Well, yeah, there is a thing like digitization. I think this is very much driving the industry and also the way people pay nowadays. So in the past, and also in some European countries, still the majority of payments were and are cash. So, for example, in Germany, about 60% of all payments are done this way still, so with cash. But of course, paying with the internet, paying with cards, and also certain legislation activity are pushing digital payments, means electronic transfer of funds. And this can be done by different means, be it debit or be it also electronic funds via online banking or the way. So if you pay and you put this example in the grocery, then chances are pretty high that nowadays you won't do this by cash, but you will do it by a debit card or, for example, also using your mobile. And if you buy something on the internet, you might also want to use services like Pay Now, Pay Later, a solution, for example, like Klarna is offering, but also other providers. So from a client perspective and from a consumer perspective, this sounds pretty easy, but in order to do this and to execute this payment swiftly and safely, you need a lot of infrastructure behind, and you need also, in order to link this infrastructure to each other, clear standards and also clear formats. As I mentioned, talking about transferring funds, and this is also a quite important thing. So, and on top of that, we also need to be safe, and this adds another level of complexity. So the simple transaction, paying something at the grocery, ends up in a pretty complex transfer of funds by doing all these means. And this is what is also driving the whole industry.
That's really fascinating. And Nikola, would you be able to elaborate a little bit more on the customer expectation side?
Yes, sure. Obviously, the customer stands at the center point of retail payments, and customer expectations are essentially that, the payment is part of the overall buying experience. And it's up to the merchant, as we call the business that the customer interacts with, to enable this experience and to bring forward all the infrastructure that Erwin was talking about. Overall, what's the goal? I mean, if you ask any customer what their expectation towards the payment itself is, probably they will talk only about the method, that all the methods are in place, that they can use their card, that they can easily log in using PayPal and so on. But essentially, if you repeatedly ask that question, you will get to basically 3 points. And I think this is kind of a holy trinity of customer expectations. One is that the payment is seamless, so that the customer doesn't feel like it's work to be done in order to get the payment across or get themselves authorized to conduct a payment. The next point is for the payment to be safe. So it shouldn't be that it's in a dodgy website or in a dodgy store. I mean, if you're using an electronic means of payment and that's in focus today, you need to feel that your payment method is really used for that payment and for nothing but. And finally, it's important for the payment to be fast, because I usually explain this in a way that for us as consumers, when we pay, we just see that the transaction has been approved, and then we can walk away from the cash desk. But imagine situations where you also need a final confirmation from the party across that they actually received the payment, like you do in cash today. And that's exactly where the electronic payment is going today. So to become a real cash equivalent, which means that there is an instant arrival of the funds on the account of the payee. And we have seen faster payments in the UK, which use the word fast, or we have seen SEPA instant payments in the EU as kind of the product behind, which enhances the existing payment infrastructure and makes it really fast in a way that it's almost real time or actually real time.
That's great. And what has been the subsequent impact on the competitive landscape?
Yeah, that's very interesting. I mean, maybe one note before we turn on to the impact on the financial industry. Every merchant is trying to make as many as possible payment methods available to the consumer, so that payments are no hurdle for any consumer to actually conduct the payment. In addition, having mentioned buy now, pay later earlier on in the talk, they also want to make, the actual purchase as large as possible. Any merchant wants to maximize also the amount they sell. And this trend and the existence of multiple local payment methods and specific payment methods has basically led many companies, many innovators to say, okay, so not every merchant needs to connect every payment method directly. There could be some middleman, such as PayPal, where as per your login, you use your chosen payment method wherever you are. And this is what we call payment enabling. We have also seen a kind of a customer experience twist to payment enabling with the emergence of wallets. In China, you have wallets which are basically platforms like WeChat. But what we know about very well is, of course, Apple and Google Pay, which basically makes your favorite payment method available on your mobile phone and uses Face or Touch ID as the authorization method. So these two are basically at the very entry point of payments, PayPal and Apple Pay as, let's say, as proxies for the development. And that's where we see most innovation going on, where the payment landscape is concerned. The part of the payment landscape that is, let's say, not as hardly hit by the innovation in payments is the whole payment processing part, which still largely rests with banks. And this is part of the explanation why let's say, the payment wallet or the fees generated from payments have not yet shifted away from banks in a way that, let's say, an average payment user would expect. Still, even today, we are talking about 1 or 2% of payment revenues being with PayPal and over 85% with most of the European banking markets still resting with banks themselves. So you can see that there is an impact on the financial industry. It's where the innovation power is lying, but the fee the fee structure of the payments still drives most of the fees towards the banks themselves, and of course the supporting networks of the cards and of the clearing intermediary and other infrastructure providers.
And what about the incumbents? Is there any room left in the world of European payments for traditional banks? And what can they do to keep up? Erwin, would you like to explain?
Yeah, simple answer. Yes, there is room left. Actually, there's a lot of room left. So if you look at the market, then of course we have two factors which we need to consider. The one is the size of the market, and the other is of course the market share of in this case banks. And if we look at the size on the market, then it's clear that due to the reasons I mentioned before, digitization, also growing of the overall market as such, we have on average growth of the payment market in between 6 to 8%, depending on the country and depending on the region. So first, and I think that's good news for all partners on the market, is that the market is growing. First thing. Second thing, talking about the market share. So I think we conducted a study a year ago, and some of the outcomes were pretty surprising to us. But I think there is a kind of a, let me call it, perceptual distortion, because people always talk about digitization and Apple Pay and Klarna and PayPal and so on. And what is basically a little bit overlooked, that, and this was one of the outcomes of the study, that basically everywhere, depending of course on different country by country, market share, Nicola mentioned this before, of banks, if we talk about the revenue of payments, so not the execution of payments, but the money you make with payments, are still 80% and up to 90%, depending on the country, with banks. So this means that banks make still a lot of money, and I think that's good news for them, with payments, and they also hold quite a large market share. Of course, if we look to the past, then of course we see it 30 years ago, it was not 80%, it was almost 100%, maybe deducting the revenue of the credit cards to a certain extent here. So this is actually from a market share shrinking year by year, but also the outlook is not as bad for the banks. However, of course, this does not say to the banks that doing nothing is an option, because the market share is to a certain extent shrinking, at least if they don't do anything. Of course, there is a need for action to a certain extent. If you look at the value chain of the payments, then you see that banks, due to the fact that they are holding the accounts, are quite often, if not always, on the back end side of the value chain. They hold the infrastructure, they maintain the infrastructure, and they also ensure that the transaction is going through smoothly. But they're losing more and more the front end part, the client part. Nicola was also mentioning that they need to maintain to a certain extent this client front end. And here there are several options on the table. Banks can do some, cooperate with channel providers or with device providers like Apple or Samsung. Some, of course, try also to collaborate with other banks. This is, for example, the case in Poland. So I think there are several options and strategies on the table. The only option which we believe is not a good option is doing nothing.
Okay. And when looking towards the future of payments, what trends are you seeing now, and what do you expect on the horizon?
We see a couple of trends, and some of the trends, of course, already hit us and are actually already there. First, I mentioned this already. Cash is I wouldn't say diminishing, but cash is, of course, reducing. Two reasons in principle. The first reason is more or less the technological development, digitization, people buying more and more over the internet. People are more and more, as I said, also accelerated by COVID and other events, using credit cards, debit cards, and so on. But also from a regulatory perspective, because We have money laundering. We have also more and more fraud. So there is also the tendency in moving away from cash here and enter the digital world. We believe that's the first. That's not a major trend. It's actually already here. The second one is client ensuring that the client fulfills his need and the client can cover his preferences. And this was already mentioned. People expect more and more real time. So if you pay cash, then it's actually real time. And the digitization approach so far, the electronic payment so far, didn't fully cover that because there was always a time gap of several days, up to 1 day now, with SEPA when the fund was really transferred. They also expect it to be seamless. If they pay with a mobile, they expect it to be across all the value chain. And already mentioned, of course, it needs to be secure. This is what Nicola mentioned to be the holy trinity of digital payments to ensure customer satisfaction.
And if I build on that, Erwin, also on the consumer preferences, based on the consumer preferences, we see the whole world of the platform economy having already emerged, having a big impact on what's going on in the payment services. And what I sometimes say is that embedded is the new normal. So basically front-running financial services and payments are at the forefront of innovation of financial services, and they have often or always have been such. No new payment product is basically conceptualized or put onto the market without this notion of embedding it into the real economy transaction. So fully embedding it into the purchase. And you name it, buy now, pay later. It's basically part of the purchase, the so-called payment gateway. So basically the link between the merchant and the consumer in the e-commerce. This is also a payment product which is deeply, deeply rooted in the transaction which is happening in the real economy. And on top of this, and this is where maybe the growth in payments is especially interesting or fascinating for me personally, is to offer value-added services on the back of these embedded payments. And often in many of our customers, we see the emergence of a merchant solutions or a merchant partner segment. This is where our customers also try to dedicate more attention to the specific needs, especially of the online merchants, but of course also with POS-driven merchants. That's embedded is the new normal. I think in Europe particularly, the regulator has realized that it always helps, to push the innovation just a little bit further. In order, that Europe is a very fragmented market, so building some certain standards also fosters innovation and competition. And this is with PSD2, which has been my favorite topic over the past years. We have seen a development in Europe where many new players have made payments a topic for themselves and have been part of that innovation. And I think this is something that's new to the consumer world, but very much present in payments for years and years, because in international payments, SWIFT has been a global standard for a very long time. Nowadays, also ISO 222 is also a standard which is globally relevant and due this year. So it is a big year for payments. And any regulator which wants to make Europe a front runner can only help and support the industry get across that line of customer expectations towards real-time payments. And I expect real-time payments or SEPA instant payments to become mandatory very soon. And finally, a more long-term trend that people are also often asked about nowadays when you look at conferences and so on. We have seen the emergence of digital assets. Crypto is the name. We have not seen crypto as a means of payment yet. However, if we think that the money is purely digital and based on distributed ledger technologies, be it as a stable coin such as Facebook's DM, or be it in the form of a central bank digital currency, the real time is no longer a question. And as long as the digital currency is expected, you can have really seamless global digital transactions. What yet needs to be elaborated is how secure, how private, how safe these transactions will be. But this is definitely a trend we are working towards. And with CBDC of the EU entering kind of the next phase after the first concepts, getting closer to implementation, currently in the assessment phase already this year, I expect some news on where central bank digital currencies will end up for us in Europe as a mainstream means of payment in the coming years.
Well, thanks so much, Erwin and Nicola, for your insights and for a fascinating perspective into the world of payments.
Thank you. It was a pleasure.
Thank you. It was great to talk about payments again.
That's all for this installment of Sound of Finance, a podcast series by ZEB Consulting. You can find further discussions on other interesting topics in the world of finance at our website, zeb.consulting.com, and be sure to subscribe to our podcast series. We hope you enjoyed today's conversation, and we will talk to you in the next episode.